I think we're there. Okay, I'll go ahead and call the meeting to order. So we are few in numbers today, but we're good as far as a quorum. I thought we might, since we have our newest member here in the room, that we might just do a quick round the room introductions. And Craig, do you want to lead off? When your mouth is full. You want to start with Robert here?
Please.
Robert, you want to go ahead?
Thank you, Bill. Good afternoon, Robert Tintel, Chief Financial Officer for the county, and I've been here about 3 years.
Angie, you want to
Oh, Angie
introduce
Howard,
yourself?
admin assistant. I've also been here for just over 3 years.
And Angie was responsible for setting all this up beforehand, so thank you very much.
Yes, thank you, Angie.
And Commissioner?
Commissioner Dare, I've been here for I've only been on this group shortly.
Yeah.
This is my latest appointment. I've been in commissioner for 7 years.
Hi, I'm Nick Lewak. I'm the county administrator. I've been with the county for nearly 17 years. The first 13 years I was in the community development department, and in this position for 4 years.
And I'm Bill Coon. She's county treasurer. We've met.
Yeah.
And I've been in this role now in January. It'll be 3 years, and prior to that, I had a long career in banking.
Eric Berlin, I'm a managing director at AJ Gallagher and Company. This is my first meeting on this committee. As you all know, spent most of my career in commercial lending.
I'm Craig Ranker. I retired 15 years ago from the banking industry, was CFO for Federal Metals Credit Union over in Albany, and worked with Chase Bank and National Bank of Alaska. Then I've been on this board for 6 years, I think.
And our other two standing committee members, Richard Ambrose, he's a principal in a wealth management firm. And he's a little under the weather today. And James Wood is the finance manager for the city of Redmond. And he had a conflict that came up this morning. He let me know about it half an hour, 45 minutes ago. So anyway, he'll go back and review the video afterwards, and he's good about providing feedback as well. So anyway, so welcome everybody. We all had a chance to review the agenda. Do we have a motion to approve the agenda?
So moved.
I'll second.
Thank you. We have it approved. All those in favor?
Aye.
Aye. Okay. Let me see, just wanted to provide, I think I've provided so the update on committee membership right now, with Eric joining our committee. Eric joined under a 2-year term. James renewed his term earlier this year, so he's re-up for another 2-year term. And Richard and Craig, you've got, your term expires in June of 27, and Richard's term is up in June of 26. So right now we're full strength, and we're in good shape there. So again, very much appreciate everybody's continued service and support of Deschutes County. This is a really important committee, especially in my mind, just because of the kind of the outside review of our activities and just providing a different perspective to the county than what we would normally receive. So I think having that kind of outside in look is really important for Deschutes County and certainly for this committee going forward. So very much appreciate that. I sent out copies of our last meeting minutes from our April 17th meeting. Do we have a motion to approve those minutes?
So moved.
I'll second.
Second. All those in favor?
Aye.
Aye.
Motion passed. Now I'll provide a brief review of our most recent treasurer's report, and this would be the one that's dated August 31st. The portfolio balance was 302.4 million at month end, which was a decrease of 4 million from July, but an increase of roughly 20 million year over year. And I think it's important to note that several factors that when we look into that increase year over year, we received, and this is Eric, primarily for your benefit, but we received, we had a $20 million bond issuance that supported our county courthouse expansion. And we also received another 15 million in funding from the Oregon Department of Justice. So those funds were basically used to support our courthouse expansion. That is currently a $47 million construction project that was delayed early on, but is now expected to be completed in early 2026. Targeting, I think the last is what, April 26 for completion. And then there's gonna be some kind of remodeling expense after that to the existing facility. But roughly, we have about $10 million that's still in the portfolio that is dedicated to fund that, fund ongoing expenses for the expansion. And what I've done is I've invested, those are basically, match funded to match up with the expected disbursements with Penn's Construction. So, we do have, again, roughly about 10 million, 10.5 million that's in the portfolio right now that is dedicated funding for the courthouse expansion.
And when I just ran into the treasurer at the Pendleton Roundup, I thanked her profusely, the state treasurer, for, she was the head of Ways and Means, Senator Steiner, and thanked her. We got 15 million and people, the rest of the state couldn't figure out how we did it. But I had the right friend with me that had a good relationship with her, and we were asking for 25 and got 15, so weren't we lucky?
And if I recall correctly, you actually made a dedicated trip over to Salem
Oh.
to,
Yes, Monday
Yeah.
morning at like
You
6 o'clock, 6 a.m. because I was told we weren't getting any money. And so I am like, Representative Breeze Iverson said, Patty, you better get back over there. I had been there so many times about that. And, you know, she was walking out of the meeting and she's smiling at us. And we got the
so
money.
again, thanks for your lobbying efforts and
Yeah.
support of that, because it was critically important to help the overall funding for that project.
It did amount to a really big deal, didn't it?
It sure did. Last week I was at a county administrators meeting and they didn't know how.
I know, nobody knew.
They said,
Well,
Deschutes County is one of the only counties got funded for anything, and they specifically mentioned that courthouse funding.
Well, they talked about that at the AOC meeting that we attended in Pineville,
Yes.
2 weeks ago as well. And so anyway, we're
I
very
said it was
appreciative of that funding.
divine intervention that I took the right friend.
It's just.
There we go. To get back to the portfolio performance, net investment
Whatever.
earnings were $1,023,000 for the month, which was slightly lower than the prior month, but 212.8 thousand higher than a year ago. We are starting to see the impact of lower portfolio balances and declining short and longer term rates on the monthly investment earnings. Started over the last several months. All portfolio category balances are well within policy guidelines. And I will comment that we take full advantage of the local government investment pool, which is managed by the Oregon State Treasury. And we keep basically the majority of our short-term liquidity in that fund. And they've kept their short-term rate at 4.6% since March of this year. I do expect that this rate will be lowered in the near term. Every month, I expect to see a notice from them indicating, but it really is an indication of how high rates have stayed in the short term in that 3 to 6 month category. Longer than that, rates are really starting to drop off. But so we've been the beneficiary of having that as kind of a backstop to, park our short-term liquidity and generate a really substantial rate of return by doing that. We were also just notified that our primary bank, which is First Interstate Bank, has lowered their rate on what we call our third tier. And they've actually lowered that rate from 4.15% to 3.95%. And that was effective October 1. So we do have a lower rate there. And that was really in lockstep with what the Fed did in September when they lowered the Fed funds rate by 25 basis points. A lot of banks actually use that rate as a base rate to target their short-term funding rates that they offer to clients. So that was not a surprising adjustment, but again, we've got a little bit of spread now between the LGIP rate and First Interstate Bank rate. And as a result, we have been keeping more money at the LGIP fund than we have with First Interstate Bank to compensate for that offset in yield. Overall, the average portfolio yield was 4.22% at the end of August, which showed an increase from 4.01% the prior month. And this was a significant increase in month over month yield. And it was primarily due to the fact we had an $18 million investment bulge, if you will, in our portfolio. And these were investments that were made back in August of 2020 imagine what rates were done then, and these were invested over a 5-year term. When basically there was virtually no yield back then, so they pushed out the maturity horizon to try to capture a little bit of additional yield. But we've basically been living with that for the time being, and that pig in the python, if you will, is finally out of our portfolio. And so it's been kind of artificially keeping our yield down. And basically what we were able to do, and I will say that the majority of those investments were yielding sub 1% yields. And we basically just had to ride it out. But now that it's beyond us, I was able to basically take those funds, redeploy out 3 years at 3.5 to 3.7%. So really able to pick up a substantial increase in yield. And then the remainder that wasn't invested longer term, we kept in our short term, the LGI people basically. So we saw a pretty substantial bump in yield, really a one-time occurrence. And I do expect, because of what the rate horizon is doing right now, I do expect yields to actually start tapering off a little bit. So in my mind, I think we're kind of right out the peak yield right now for the portfolio. The recent investing that I've been doing, as I indicated earlier, has been in that kind of 3.5 to 3.7 range, and investing out to maintain our 3-year ladder. So, I don't think any questions on any of that.
Don't you think it's fascinating the state hasn't lowered that rate? I mean, if they've had that rate since March.
Yeah, it's really a function of what they're investing in right now, and they've really been investing short term. But I do believe that rate will drop, and I'm guessing over the next several months. I just don't see how. I think it's been, kind of artificially propped up because of how high short-term rates have been in this kind of rate cycle.
We still got an inverted yield curve
Oh, very much.
in the short end,
Oh, yeah, very much.
not
inverted.
not the long,
It's starting to flatten out longer, out beyond 3 years. We're starting to see it actually get out of that inverted cycle.
Yeah.
But again, I think short term, that rate does have to come down eventually. So the portfolio now has a weighted average time to maturity of 1.11 years, which has been relatively constant over the past year. The shorter average has been influenced by the short-term liquidity that we've been keeping in place. And also, we're targeting roughly a 40 to 45 million range monthly, which gives us good financial flexibility to cover obviously needs associated with our capital projects, with the courthouse, and our ongoing expenses. And right now, we're kind of at the low point of our revenue cycle. And that revenue cycle will step up considerably when we start going into tax season. So we'll be, starting kind of mid to late October, we'll start to see people making property tax payments early. And then when we get into mid-November, we really start to get into the bulk of our tax collections.
that's due
The 15th?
November 15th, is it?
Yeah,
Yes.
November 15th due date.
Yeah.
Get the discount.
Okay, yeah, okay.
Yeah, and that really
3%
drives a lot
discount.
of people's decision on when to pay property taxes.
And Wells Fargo pays it like at 4:59 on that day normally. Cause I check.
Well, there's a reason for that, when you
Well,
think
yeah,
about
it's-
it,
it's
because
the-
an impound count, they get the benefit of having those funds available on their balance sheet before they're transferred over to ours.
Yeah.
Yeah. Yeah. I will also say that average weighted time to maturity is also skewed by the courthouse project. So we've got $10 million in our portfolio right now is dedicated towards meeting the expected disbursements on the construction contract with Penn's Construction.
So will that be spent by, you said?
It'll be spent, right now, those funds will be spent by April of 26,
By
of
27,
2026.
and then there's no more expense for the courthouse.
Just ongoing remodeling expense. I think the majority of the new construction will be funded by that point. And I've actually, Robert, you might indicate what your kind of expectations are for ongoing construction beyond that.
Yeah, those are the funding available for the construction and remodel costs. That's built into that. But then it will have an operating impact on the general fund after that.
Yeah.
For each year. So
Yeah.
those funds aren't played for all the construction. And I was thinking it might be August.
That's a new date.
Yeah.
Okay,
I didn't want to tell you.
yeah.
I like the Terrebonne project. that they Had it on the
I'm not
website.
surprised by that. I haven't sat in on the most recent meeting there with regards to that, so. Well, anyway, our funding actually will be utilized or used up by April. It'll, basically those short-term investments will mature. And the funds that they're not immediately needed for the courthouse project will stay as kind of short-term liquidity until they're needed. So. So I did also want to note, and I know this question has come up in the past, is that we do have a limit on how much we can leave in the LGIP fund. They set that limit annually, and they recently increased that limit from 63,387,000. They set the new limit at that level. And that was up from 61,749,000 over the last year. Which is beneficial as we head into our busy tax collection season, again, starting in kind of late October. And then also a reminder is that we do have roughly 20-day window to get down to that limit. So if we go over the limit, we do process tax turnover during our peak season on a weekly basis. So we're basically trying to turn over those funds, get them out to all the special districts, et cetera, but it takes a little while to do that. So the state recognizes that it takes a little bit of time for member agencies to transfer funds appropriately, so we have a little bit of flexibility there. And again, Eric, that's, just informational with regards to how we kind of manage our short-term funding and some of the tools that we utilize to do that.
Sure.
Um,
You mentioned the low interest rate balloon that paid off last
Yeah.
month. Are there any others, I mean, that are in that low?
Yeah, very, very nominal. That was really kind of the end of it. There is, and I've gone through the portfolio, but we'll start to see it dramatically drop off. But there's still that period from August through August of 2020 to probably early to mid 21, where we were still in a pretty low rate environment. But the bulk of those funds were tied up in that bulk investment that was made in August of 2020. And that was invested, those funds were invested over the 5-year horizon,
I say just,
and primarily in agencies.
and just quickly looking at the portfolio, I see on the third page, there's a few that are in the one point yield to maturity.
Yeah,
And so but that's all I see.
but that's pretty much the bulk of it, yeah.
Okay,
So
and that's only.
I think we're in a really good position right now after we saw the redemptions that we did in August. That kind of cleaned up the portfolio quite a bit.
Yeah.
And so now we're moving forward, and I feel really good about kind of where we are right now. And we, and again, Eric, for your information, trying to build out a 3-year investment ladder, which seems to work well for the county. I'd love to invest beyond that point, but we just don't have the investable funds to be able to do that. So what we try to do is we try to target about an $8 to $10 million redemption every month. And recognizing that when we get into the fall and the tax collection season, we don't need a higher level of redemptions because we have tax proceeds that we can basically backfill behind that. The other thing that I've started recently working with Robert on is match funding our debt servicing, which is typically in April of each year. So we're starting to set funds aside from a redemption standpoint to match fund the debt servicing that we have out there right now as well. And it's gonna take a little while to do that. It doesn't happen overnight, but really, when I get into the investment cycle here, starting this fall and in December or January, I'll be investing kind of beyond that or up to and beyond that 3-year investment window. So,
And the yield to maturity listed on the report, that's at purchase, correct?
that is.
Okay.
Absolutely is. And we do not, and this question has come up before, is that we do a hold to maturity strategy. We do not do a mark to market strategy, which could be potentially catastrophic from month to month with all of our different departments, and we'd have to adjust, it'd just be a constant shuffling of budget funding and all of that. So it is hold to maturity strategy and we do not mark to market. So we are not actively trading existing investments. we make the investment decision and we hold the maturity.
And the market value is effective the date you draw the report.
Yeah,
I mean,
that's-
so that's an accurate mark to market value.
Yeah. Yeah, and again, we talked about the older investments that we had in the portfolio. Most of those are now out. And then talked a little bit about our seasonal investment cycle. Again, that'll be starting late October, early November and into, usually that last round of investing is done sometime in January, and then taxpayers that pay on the payment plan, if you will. So we'll go through another, series of investments, second, third, kind of the trimester payments that come in on tax receipts as well. Let's see, anything else? And again, I talked about portfolio yield. I think right now with the rate environment that we're currently in and what's going on with the existing portfolios, I think we're kind of peaked right now from a yield perspective. And especially if they start to cut the LGIP rate, I think we're gonna see, that will also have an impact on overall portfolio yield.
So the rolling off of the low yielding maturities is kind of taking place, so there's no additional
There's no additional really big bump out
bump
there.
out there to come
Yeah.
from.
Yeah, no, I don't see that.
Okay.
Again, longer term rates have dropped off, and I actually just looked at 2 and 3 year rates this morning. 2-year rate was 3.49 and the 3-year rate was 3.52, 3.53. So again, we're starting to see that, and those rates are down even over the last several months by 20, 25, 30 basis points. For the last 3 months, we've seen a fairly significant decline in kind of midterm rates. So,
But market value is now higher than book value on.
we knew that was eventually
Yeah,
gonna turn, and I think you asked that question last spring.
yeah, I mean, last spring it was negative and
Yeah,
now it's, but that's obviously a result of the Python and.
exactly. Yeah, the pig in the python approach is kind of the way I viewed it, is we had to let it kind of work its way through the system, and it finally did. We were able to take full advantage of it. And redeploy those investments to a much higher yield than what they were previously. So, any questions on portfolio discussion?
There was on the investment income. Month to date looks, prior year compared, August 24 was 824,000. Year to date, same number.
Huh. I'm not sure how that happened. Yeah, that should have been 2 months, not 1 month.
All right, so shouldn't it be closer to $1 million?
Yeah,
$2 million?
Yeah, the year to date.
$2 million?
About two.
Or
yeah,
$2
it
million
could have been July and August, so that was, yeah. Good eye.
Thank you.
Thank you, Craig.
I know it's correct. I actually have the September report prepared, but I haven't presented it to the board yet. So I couldn't discuss it at this committee, but I do know that that number is accurate there, but
Okay. Good. Cause your year to date is from
we start July 1.
July 1, okay.
Yeah.
Okay.
Yeah, it's July 1 to June 30th.
So
So we would
July,
have technically been in 2
Yeah.
months into the current fiscal year.
got it, okay.
So I'm looking at the 30-year and it's just said today, 6.22 to 6.47 on a 30-year. But then, and then we actually, I guess it was from a
You're
separate.
talking about mortgage rates,
Right,
30-year fixed rate
I was just
mortgage.
looking at that because, that's so impactful on the housing market.
I'll be
I mean-
talking about that a little bit in a couple of weeks as well.
But then we also just, what, was it in 2020 or when we did the 13 million to the PERS account?
PERS account. the-
Right, and we got a quarter match from the state, if you can imagine that, so another 3.25 million or something. But then we just did another, did we do 4 million? 5 million, wasn't
Yeah,
it?
I know.
And then we get another quarter match.
Yeah. Yeah.
Yeah, like,
That's great.
it seems like, it's Christmas or something, yeah, but they're matching
We had to
25%.
take full advantage of that program.
Yes,
And once again, that's a real credit to our finance team for doing so. Again, that county administrators meeting last week, a lot of counties hadn't done it, and they asked who.
Well, they missed the window. There was a certain amount
a
of funding available.
short window, and you had to have the money, and it had to be
There was about
cash.
30 or 35 million available in that program.
Yeah, I think it ended up being 33 that
Yeah.
phase one, phase two, and there was actually one jurisdiction that did apply, but then ended up backing out. We don't know the details or who or why, but they listed on their website, interestingly enough, they speak for a variety of reasons, but it is a great.
Well, it's Christmas.
And that reduces our overall contribution rate.
PERS rate, the PERS rates that get charged to the county.
So basically buying down a contribution rate to our PERS contributions.
Is the county's contribution fully funded?
No.
We're way better than a
We're,
lot, aren't we?
yeah, we're great on the curve.
Pretty good. Yeah.
And what are we, mid-70?
Yeah, we are in a pool of it, but yeah, we're not all and that's why the state is offering this program for site accounts, is that organizations hopefully could apply more funds into a site account, which buys down the liability. And it's system wide.
Yeah.
That's where it is. Yeah.
I understand that's a growing problem nationally.
Yeah.
And will continue for quite some time.
Yeah, and not only, for public entities, but corporate entities.
Right. And it is meant as a pay-as-you-go system, where each year we are funding it and paying it. They hope to get fully funded, but it'll be a while before that.
Was it ever fully funded?
Not gonna,
No,
Okay,
aspirational goal, but it's never reality.
I mean,
that's the pay-as-you-go type of.
yeah.
Yeah, the unfunded pension liability issue is one that requires constant attention. And you just, with PERS reform, we're not really gonna see the full benefits of that till the tier one retirees are kind of out of that system.
You mean the Mike Pilates of the state?
What was that?
You mean the Mike Pilates of the state? What does he get, 550,000 or something?
Great.
It's a nice one.
Yeah. Yeah, he definitely is benefited by that program.
Till they oppose the cap.
Yeah. So any other questions on the treasurer's report? Craig, good eye on that. I'll, like I said, it has already been corrected in the next month's report, but,
That went before the commissioners?
so investment policy discussion, really, just a reminder, again, for Eric's benefit, our spring, investment policy, committee meeting, we typically review our investment policy and go through kind of an in-depth discussion there, recommend any changes. That's an annual, process that we go through. We went through that this last spring. And where we are with, so we've made the revisions, we've made the proposal, I presented to Board of County Commissioners. It's been presented to our internal investment, our policy advisory committee. The state, so we deal with the, Oregon, Short-Term Fund Board. And in the past, we've actually just presented and they've done a desk review of our proposed changes. And that's been fine. Well, they did the desk review, but they've changed their policy slightly. And now each of those modified or recommended changes needs to go on the consent agenda to the next board meeting, which is scheduled for November. So that's kind of where we are right now. So we're waiting. We don't anticipate these were viewed to be non-material changes. And you can see there's a red line version of the policy in the packet. Basically a little bit of cleanup language on the scope. We didn't believe that we needed to go into that much detail because that would require that we likely adjust that on an annual basis to reflect where the current portfolio stood. And then on page 5, page 6, I believe, just some cleanup language. There was contradictory language in the chart found. At the top of page 8. We had a weighted average maturity of a portfolio, and it shows that was under the chart, it showed that it should have been a minimum requirement, and that is actually a maximum. So we removed that from the chart, and it does clarify exactly what the portfolio requirement is on the next page, page 9. under section 3.f. Or 3F, I should say, shall be 2.0 years, so. Anyway, just a little bit of cleanup language there. And so there isn't really anything else that the committee needs to do right now. If for whatever reason, when it goes before the state board and their consent agenda item, if for whatever reason they come back and say, you know, we don't agree that these are immaterial changes, then we'll deal with that next spring when we go back through our policy review. So we'll, again, we do that on an annual basis, and just, I would say in general, appreciate the insight. It's always good to have kind of other eyes and ears, kind of reviewing things and looking at things to make sure that they make sense. This policy has been out there for quite some time. You can see the number of revisions that we've gone through. And I think over time, we're trying to, you know, fine tune it to the point where it really is a very tight policy guideline. And it does guide what I do in my role as treasurer, and certainly Robert, you know, our CFO treasurer, combined roles here. It is our policy guideline, and it, I will say in general, is we have a very low tolerance for risk. And Eric, this is again for your benefit. Even though our federal government debt has been downgraded now by all three major rating agencies, but it's still, when you're grading on a curve, it's kind of the best thing out there. But it does really, you know, we're focused on preservation of principal, liquidity, and yield is the third target that we use there. We are not making investment decisions on yield and yield alone. It really is preservation of capital first and foremost, liquidity, making sure that we have adequate liquidity at the right time in our cash flow cycle. And then yield is the third leg of that stool. So, but again, it's very useful, very useful tool, and it does really guide how I interact with our brokers and making decisions on potential investments for the county. So, any questions on any of that? Hearing none, that's good. Oh, I did. This is an interesting little aside. You know, you hear things in the news media, and last week it was announced that the California Public Employee Investment Fund was proposing a $2.4 billion investment, private equity investment in the Big Ten Conference, essentially to fund NIL activity. A $2.4 billion investment in a athletic conference to fund NIL activity. This would not be allowed by our investment policy. I just want you to know. But I saw that and I go, what? I mean, these are public retirement funds.
That is surprising.
Yeah,
What was that called? Halliburton or something? Yeah. No, I mean, I'm just thinking back to that investment.
yeah.
Whoa,
So anyway, just,
Yeah.
oh my gosh.
it's something to think about. Any further thoughts on our investment policy and the process that we go through annually?
No, I mean, it's
Yeah,
critical to keep it
yeah, current.
current and, you
Yeah.
know, cautious and liquid.
Yeah. I would agree,
You know, that's-
100%.
So if you were weighting that, would you say preservation is 50%? I mean, how are you, you know, with these three things, I mean, where you said yield was, it's clearly less then.
Well, investment quality, it has to meet the requirements of our investment policy in terms of risk rating and also portfolio categories. So we can't be overweighted in a particular area. Like we can invest in high yield, high grade, investment grade corporate bonds, but at a very small percentage of the total portfolio. So that does guide our decisions as well, where I can't load up on corporate bonds right now, which typically yield a higher yield than treasuries do or agencies do, because I'm limited by the percentage of the total portfolio. Does that answer your question?
Yeah.
Yeah. So right now, you'll see when you look at the portfolio breakdown of our investments were primarily heavily weighted into treasuries. And secondarily into agencies, and in third place, a much distant third place is investment grade corporate bonds. And so again, that does help guide my investment decisions, that I can be looking at opportunities, offers from our different brokers, but you know, I can load up 100% in treasuries. But that doesn't make a lot of sense either, because sometimes I can capture yield by going out and looking at specific bullet agencies. And also, we have very limited exposure right now to callable investments, which is good because we're in a period, because of the dramatic drop off in rates, that some of those callable agencies are now being called. And actually, I did a little review of our portfolio between now and the end of the year. And I think because of the yields that we currently have on those agencies, we have very low exposure to callable bonds right now. Because that basically just creates an opportunity where I've got funds that are coming in that I hadn't expected, and then I've got to go back out and reinvest those.
Well, I think that you're picking the Python is a good example of where, you know, risk was taken
Yeah.
to capture yield, and that, you know, kind of
Didn't play out well.
didn't, yeah, it hindered things for the last couple of years.
Yeah.
I mean, at the time, okay, you know, nothing was yielding anything. Shorter term wasn't yielding anything, but with the rapid rise in rates that occurred, you know, a few years later,
Oh, yeah.
you know, that put the portfolio underwater for a
Yeah,
while.
yeah, when you look back in hindsight, and granted, at the time, and I was actively involved in banking at that time and dealing with what was happening in mid-2020, so I know exactly where we were at that point in time, and we didn't know how long this was gonna last.
And it had lasted for longer than expected.
It
I
did.
mean, low rates
Yeah.
lasted longer than
Yeah, a
expected.
year and a
and it
half,
went
2
super
years
low.
before rates started to go back the other way.
Yeah, so.
So at the time, you make decisions based on what you know, rate certainty, but you know, we all have the benefit of hindsight, and it's usually a little more crystal clear than it was at the time we maybe made that decision. So anyway, that's beyond us. We're, you know, I think in general, the portfolio is in good shape right now, and
And that was before your time, so.
yeah.
That, before your time.
And the callable number is just this 9.8 is what's actually callable in the portfolio.
Yeah, those are actually, yeah, 9.8% of, and any individual corporate issuer, then we need to be 3% or below.
Got it.
Or, excuse me, it's 5%, we're at 3% right now. So we target concentrations in corporate issuers, and also we have limitations on how many callable investments we can have in the total portfolio.
Got it.
So. Okay, onward and upward. We are now under other considerations. Oh, and I just wanted to comment, again, this is for Eric's benefit as recently joining the committee, but what I did shortly after I stepped into this role was created a template, a simple trading document that would capture our adherence to policy discussions as I was making investment decisions. And basically, the document captures the intended goals of the investment made at the time. So really looking at duration and type of investment and how much we wanted to invest in each one of these categories. And then, so it tracks in an Excel spreadsheet document the investment type, maturity, security rating, yield to maturity, and then my efforts to make sure that I'm getting a competitive bid. So basically, when I get an opportunity to invest, say, $10 million, that I'll go out to the broker dealers that we have that we have contractual agreements with the county, and I'll put a bid out, or I'll put a request out and ask, and then they respond with their offerings for that particular type of investment. And then with this tool, and I'll send you a copy of it, Eric. I didn't think to bring, I've certainly reviewed it a couple times with the committee, but I'll provide you with a copy of that so you can take a look at it as well. But basically, it's a tool then that I can use to quickly analyze the competitiveness of each one of these bids and make a decision on which direction I want to go. So basically proving out that we're getting best yield, which typically has the fees embedded in the yield. So we can compare like type investments to make sure that I'm selecting the right type of investment for the county.
Okay,
That meets the competitiveness of that.
yeah,
Now, recognizing that on a one-off basis, I might have an opportunity with a broker where they've got, something that they've got either in portfolio or it's one-off that maybe isn't available to all of our brokers. And then they offer it up and I have to make a decision based upon the current rate environment and what I see in the market as to whether or not that's a competitive offer to the county. So that type of purchase wouldn't necessarily fall under this, utilizing this trading document. But when I do put out a pitch, and I'm typically investing a block of funds on behalf of the county, I'll put the pitch out in the morning to our brokers. And then I'll wait, half an hour to 45 minutes to wait for all the offers to come back in. And then I start kind of fine tuning what direction I need to go.
So do you do that at 6 a.m?
What's that?
When you put that information out, do you do that at 6 a.m. or what time?
I usually let them have a little bit of time to get their feet under them as well, but I usually try and get it out by about 7:30 to 8 o'clock in the morning. So we
I
have
was
a
just
good idea as to what direction the market's moving. And recognizing that you have to make decisions with regards to any economic news that might be out there. Is there an upcoming Fed meeting that we might take into consideration? So I will typically track rates maybe for a couple days prior to that actual, sending out the pitch to our brokers to get a sense as to where we are. And right now, we've had the luxury of basically being able to park funds in our short-term, the LGIP pool, which has typically been yielding a higher return than I could by investing long-term. That won't always be the case, but right now I've had the benefit of not losing yield while I'm waiting for the right investment time to pull the trigger there. So
You're
anyway,
actually
that was
probably
something
ahead.
that we hadn't done previously. Our internal auditor had asked questions about that as well, and I think this is a tool that just supports the scrutiny, the analysis that goes into making the decision that I made based on the information that I had available to me. So, and I'll send you a copy of that, Eric, so you can see what that document looks like.
Great.
Yeah, anyway, any questions on that? I know we talked about it previously, but I feel like it's a very useful tool.
And it's help working for you.
It does, it is working. Yeah, I
Good.
think it's working well.
It works for audit.
Yeah, I'm very comfortable in just documenting and again, being able to track the quotes and fine tuning that, making that final decision on behalf of the county. So anyway, I think that was really what I wanted to conclude under other considerations. Now, this is one of the more valuable parts of this committee meeting is talking about the market. And I know we aren't not at full strength right now and very much will miss James and Richard in their market commentary, but I'd love to hear, Craig, if you want to lead us off, kind of what you're seeing out there, and there's a lot of information to digest.
Let me just comment on the portfolio report. I like this organization better with organized by maturity date. So Patty,
That was a request that was made last spring.
That was me.
So, and if I could just comment on that, so I've gone back and now the Simpro reporting software that we use to manage our portfolio, I actually just go back and do a primary and a secondary sort to sort each investment type by maturity, starting from the earliest to the oldest maturity. So each category is being sorted by, and I think it makes for a much more readable report.
sure.
So thank you, Commissioner Adair, for that recommendation.
It's always interesting how people's brains work. Challenging.
Well, I guess market commentary, as you said, rates have started down and, or they're lower than they were a month or so ago. And that trend seems to be continuing, although with some volatility. And my guess is there'll be another Fed rate cut this year, but probably not two. I think inflation will continue to be sticky. It's my reading that the tariffs are working their way through the economy, and we haven't seen the full impact of those yet. And I had personal experience with that recently. I'm buying a new RV trailer, and the one I looked at on the lot was great. And I said, yeah, that's the one I want. Well, that one was sold, so I had to buy the next one. Well, the next one's not coming out until the next production run, which is November. And the base price for it is up $2,300
Wow.
because of aluminum tariffs. It's on a $60,000 RV trailer. So there's, an example where, today the impact is not real. A month and a half later, it will be. And, that's how it's being played out.
Is within the supply chain right now.
It's within the supply chain.
And it's actually being passed on to consumers now as opposed to being absorbed by wholesalers and manufacturers.
Yeah, and apparently the manufacturer, had over the summer worked off, their inventory of aluminum, but their next purchase of aluminum,
Yeah.
cost me another $2,300. And, you can't stand up an aluminum plant, in this country overnight. So, how's that gonna ripple effect through, and how long is that gonna be there, and so on and so forth. So the impact is, the stickier inflation rate is still there and probably will continue. And if, we hit China with 100% tariffs or such, that's also has a concerning impact. I read another report recently related to that manufacturing employment has continued to decline in the last 8 months. And that the cost of the tariffs to the companies that consume goods is greater than the economic benefit to the companies that produce the goods that we're trying to reshore. And that, is driving, or part of what's driving the decrease in manufacturing employment. So that's a, continuing concern out there. And I think the other, economic impact is with the tariffs up and down so quickly, or potentially going down quickly, and obviously it's gone down some, or, businesses are reluctant to make long-term decisions.
Because of uncertainty around future.
Yeah, if you can put some tariffs on, overnight, you can take them off overnight.
Mhm.
And if you do that, and you've started building an aluminum plant, and you're halfway through it, and then they remove the tariffs, then what? That I think translates to inflation and stickiness. We consumers are going to pay for it. And how long that goes on, or how much it really worked out to be, will we settle at a lower tariff level than is currently proposed? Will have an impact on inflation.
Did that impact your decision to buy the RV?
You could buy a used one. Who's the one who used one?
I'm selling a used one.
So the value of that probably also increased.
Yeah,
Well, yeah, I mean, so it's, I'm getting more out of the trade-in out of the used one than I expected, but,
Yeah.
no, it was kind of like,
But how many consumers out there, when they're thinking about a capital purchase, are delaying, deferring that purchase while they're uncertain about cost as well?
well, and you look at the job market and the uncertainty related to that.
Mhm.
And the other big impact out there, which we've not seen the impact, the direct impact yet of, but the market has, is AI. And, something like 75% of the gain and 75% of the earnings this year are directly related to AI investment. And that AI spending has now exceeded corporate building
capital expansion.
Capital
I saw that same
Yeah,
report. Yeah, that was phenomenal.
yeah. And, I'm reading more reports about, is AI a bubble? And some, parallels between now and the late nineties.
The dot-com.
I was gonna say, there's always bubbles.
Yes,
Yeah.
Breaking a bubble.
and, the dot-com bust. And, I think that is a risk that needs to be managed and made aware of. Cause if that bubble bursts or even shrinks, then, where's it go? I think there's still a lot of value to be gained in AI. In terms of implementing the use, but the spending to develop it, can it continue at the rate it has is the question. I read another report about, the president of Ford took a tour of Chinese plants and was amazed at how much robotics they're using, which is far exceeded the rest of the world. And they've got factories that have no lights on because they don't have any people in them, because the robots are doing all the work. And, that's increases the productivity, and they've done it without decreasing the people employed. They just retrained them to do other stuff. But that had, Ford was saying, the president Ford was saying, if we don't get on board with that, we're not gonna have a Ford company in the future. And, so that's another potential threat out there.
Do you
Economic.
have any good news?
Things are still growing.
Lights are on. the
Lights are
Sun
on.
came up this morning.
Yeah. It's,
It's not snowing yet.
Yeah.
I guess it's a reason to be cautious is what I take
Couldn't
away.
agree more.
And,
A
that,
lot of headwinds out there right now.
a lot of headwinds. I mean, I spoke about it last time and, it's still there. The debt we have out there and the new, tax law will increase our debt. And, how long can that continue to grow? And who's gonna pay that burden down the road? So it's,
Approaching what, 38 trillion?
yeah. And, I've kind of touched on it with the pension plans underfunded and, but so many other areas are underfunded, whether it's capital expenses or maintenance or this, that, or the other.
Mhm.
And I think it's true, government wise, but corporate wise as well. We've got infrastructure that's not up to snuff. So I think it's a time to be cautious.
Yeah, I couldn't agree more.
Because it's, and that, I think, investment wise, rates will trend down. But I think it's also prudent to stay short, even though the rates are trending down just because of the potential unexpected.
Yeah, future treasury auctions, what yields they might need, investors might require to purchase that type of investment. I think, this rate thing could go the other direction fairly quickly, especially on the longer end of the yield curve.
Yeah, I mean, other countries, with the shrinking dollar and the devaluation of the dollar, declining dollar, other countries, shun our credit. That could drive rates up, so it's, I think that's another risk out there, so it's.
Yeah, no, great comments. Couldn't agree more.
I would agree with much of what you just said. The economic outlook, broadly speaking, feels very uncertain to me. And while I agree, it seems like rates are generally headed down. There's a lot of things percolating out there that could drive them the other way too. I mean, in particular, I think there's a lot of political uncertainty out there right now, just the government shutdown, renewed concerns like you're mentioning about rising US deficits and long-term fiscal sustainability. There's geopolitical events outside of this country that can introduce a lot of uncertainty very quickly. The tariff, tying into what you said too, I read a report that consumers are the estimates vary, but I read a report that consumers are bearing anywhere from 50 to 70% of the costs of tariffs that are flowing through. With the rest being the companies taking the hit. So I found that interesting. Consumer sentiment seems to me anecdotally feels weak, but a lot of the data is kind of more neutral, which I think is interesting. There's reports of discretionary spending coming down. There's other ones saying it's actually picking up. Kind of hard for me to get a read of exactly where the US consumer is at, but it feels like if anything, it's kind of marginally negative. And the labor market, I think, is really interesting too. I mean, it's generally stagnating. I think the Fed characterized it as a low hire, low fire environment, which probably speaks to the uncertainty just from a business perspective of hiring plans and wanting to bring on additional headcount. But interestingly, there's also a wide dispersion between sectors. Some sectors like healthcare are adding a lot of jobs right now. Other ones like manufacturing and I think I read construction job openings just posted their second worst month ever last month. So you have this weird dichotomy of certain industries are getting hit incredibly hard. Other ones seem to be faring much better. I think it all just points to me to greater uncertainty and probably the need to take a cautious approach from an investment standpoint. I think my last note that I had was just, inflation. I mean, core inflation has been much more persistent and for a much longer time period than I think a lot of people expected. And we've seen, some of that isn't even in the inflation numbers, but housing, utilities costs, food, services-based businesses have all increased, I think, quite a bit. So to me, it's an interesting landscape that has a lot of puts and takes, but I think there's a lot that feels very uncertain to me and probably merits a cautious approach.
Do you have any finger on the pulse of the insurance industry and their perception of it? I mean, in your work or?
Not broadly.
Underwriting or absorbing all these catastrophic events, that sort of thing, financial
Yeah, I
health
mean-
of the insurance industry.
I mean, I look at the insurance industry as, they're the ones that have the actuaries that are looking forward to.
They're the canary in the coal mine.
Yeah, and we've seen it with fire insurance, homeowners insurance and the impact of fires. But, they're the ones that I think also, in other industries, have a canary in the coal mine, for lack of a better term, a sense on, what's the real impact of this? And are they seeing things, across the sector that is concerning to them? Because obviously the insurance companies are long-term oriented.
Yeah. I think, certainly from a pricing perspective, property and casualty insurance and automobile insurance seems to have increased quite a bit over the last 5 years, as I'm sure we've all experienced personally too. Which I think points to just, rising costs of replacement or, tariff impact on the cost of vehicles or whatever it is. But I wouldn't say that I have a great read on it, but it, other than the price increases in certain lines of business have been pretty staggering. Especially with, property insurance, I think is a standout one to me.
Yeah.
Yeah, no, great comments. Commissioner, yeah.
Well, I have a probably different perspective. I did actually miss my business show this morning, but that's okay. Honestly, the fact that our pills were made in China, that has been freaking me out personally for years. And I was so thrilled when I heard Eli actually, the drug company started bringing back their plants in like 2020. Oh my gosh, what would you have thought? It's so critical that we can, take care of ourselves and have those, produce our own pills. I kept going, where are these pills made? No, I don't want generic. Where is this made? Where is that made? So, seeing, and I saw what their stock was listed the other day and I thought that was good. And then I thought really, actually what Las Vegas did, where they raised all their prices so much. so much. And yet I see Americans are still visiting elsewhere, but they're not going to Vegas because they raised their prices so much. They made that place so expensive. And guess what? America said, no, we're not going there. You need, and so I'm hoping that that's when I go in December, it's gonna be a little cheaper because,
National final version.
yeah, for the, anyway, it, isn't that interesting though, to see how much people say, no, we're just not gonna go there. So Americans are really actually spending their money much more carefully than I think they would have. And my story is that in 39 years ago, 40 years ago, my husband had a BMW. And I said, oh my God, Bob, you've got to sell that car. We've got a terrible trade deficit. You've got to get an American car. So he actually did that. He got a Ford. Oh my God, it was the biggest lemon ever. But he did it. He did it. Oh my God. Yeah, and then you don't want to turn it in early on a lease because that goes on your credit. So we learned, that was another lesson we learned. But in May of 2016, the jobs number for the country was 11,000. Oh my gosh. You remember the malaise? It was a total malaise. So when the jobs number just came out, I think it was July of 22,000. I'm like, oh Lord. And yet I know this manufacturing is I believe it's going to take a while to bring it back, but we need manufacturing in our country. There are people that were working in that industry. I'm so sick of light bulbs from China. They say they're gonna last 12 years or something ridiculous. They're $25 that I'm paying now and they blow up in 6 months. And I'm like, oh my gosh, where did I buy this? What did, we have got to do our manufacturing here. And I'm really sad that it hasn't happened that fast, but I believe it's gotta happen. So I'm really actually maybe more patient than I should be. But I feel that it is important that Americans do things that are good for our country. So anyhow, let's see, I was trying to think, yeah, those are some of the things. I do believe the manufacturing is gonna come back, but you always need to be cautious. So, and I'm just,
Great comments.
well, it's a different perspective, but gosh, Las Vegas, how long has it taken them to hear that message?
They're
but I-
hearing it loud and clear now.
I just looked up the Bellagio. It was now, I can get my room for $178 a night, including all fees, with $100, whatever, for my food.
Miscellaneous
I get
activity.
breakfast every morning. Yeah, no, I mean, it was way cheaper than a year ago, just
Yeah.
way cheaper. So now some of the other one, the Four Seasons was like, $500 a night still, but the Bellagio has gone way down. So I was really happy to see that. But you have to be balanced. So, but no, he did buy a new BMW though. My husband did after 39 years. And I'm like, whoa. And
Time for you to go back to work.
yeah, I know, no, keep working, Patty. So anyway, but isn't that funny though? Cause I was so worried about the trade deficit and our country's balance at that time. I kept, anyway,
Mhm.
and he has his new BMW and he wants me to drive it. And I'm like, no, I want my pickup. So
Yeah.
I can drive it, but it's way too electronic for me. Everything is a button and yeah, it's just like, please, what if you're in a snowstorm and it's done, I can just vision that.
No, great market discussion. I completely agree with the comments that have been extended here this morning, or I said today. I do, yeah, we've got to get out here shortly. So,
Oh my God, thank you, Robert.
anyway, my concerns are talking about potential privatization of Fannie Mae and Freddie Mac. No longer government sponsored entities, potentially what impact that might do to investment grade yield and all of that. So I think that's something that I need to stay on top of. I think the Fed is in a very, very difficult situation right now with really low jobs numbers. Matter of fact, we don't have a September jobs report because Bureau of Labor Statistics is not
Oh.
producing one.
Does anybody know why that guy from Heritage Foundation got removed from that? He was up for being.
I don't know. that.
I-
I think it happened without a lot of fanfare.
Yeah, AJ, whatever,
Yeah,
Anton or something like that. Anyway, I was just like trying to figure out.
So
Because he
this
was the
government-
numbers guy.
shutdown right now is gonna have its impact in a number of different ways, and we maybe don't get the current statistics like we need to make informed decisions. And also, it's gonna be a while before it gets resolved. They're talking like this could be the longest shutdown ever.
That's
And
what
right
they're
now, the
saying.
two sides are not having really any discussions. Any formative discussions, I think they're very far apart, and so I think we've gotta be prepared for a much longer run than that. So rate cuts between now and the end of the year, I tend to agree with you, Craig. Yeah, earlier I was thinking 2 cuts between now and the end of the year, might be 1. Inflation is still sticky, but the job market is anemic. And that no mandate that the Fed has to try to maintain full employment, but keep inflation under control is very challenging right now.
Yeah.
So.
Can't you call it transitory and? Yeah, no, I
Yeah,
got the job.
it was real and it was here for,
Well, it was 9%.
yeah,
It was-
so briefly, to bring this to a close, we'll have another review of our investment policy statement this spring. So be prepared for that. I'll also do my annual review of our broker dealers, do this annually as well. We went through the process I did in late May and June. I ended up retaining our existing 5 broker dealers for the current cycle. They're all doing a great job, very responsive, competitive bids. It feels like the right number. That less than that, occasionally we'll have a broker that's out on vacation or not able to respond, so we'll still get 4 bids. So we're getting competitive bids, managing more than that doesn't make a lot of sense right now. I have more brokers that are interested in joining our pool than I have slots available for them. So anyway, keep that in mind. Any other discussion items?
Is the shutdown impacting the county directly?
It could possibly with WIC, but actually I saw the tariff funding was supposed to go over and fund WIC. So they were recognizing the importance of that. So,
Okay.
Our health department is one area. Actually, Nick, if you want to comment on that.
Yeah, that's right, and you probably have, Commissioner Dara's probably more up to date than I am on with AOC meetings yesterday. My guess is I missed the Association of Oregon County meetings yesterday, so I'm just curious if Association of Oregon Counties talked about it at all in any capacity or?
no, I don't,
No.
no, I don't. I took notes and I don't remember anything that was really popping up.
Too early to tell, I think, was the
Right.
comment, some concerns about Medicaid reimbursement back to the state.
Yeah.
And then how that goes back to the counties. Our health department is
Yeah,
actually.
health
well
services
funded
is the
right
big
now.
one, and then the other one, and I don't think we were impacted by it, but there were $400 million in clean energy grants that were canceled for Oregon.
Yeah.
I don't think that affected anything that we have, those are already all fully funded, such as what's happening about Bachelor, other places, so minimal this moment, but to be determined.
And
But I
then,
still need money for the Terrebonne sanitation system because it was a $2.5 million kickback from the feds. And I didn't get it through Salem this spring, even though I went there like 6 times. Couldn't get that funding and that project needs to go ahead.
Yeah.
They need like $1 million, I believe, to keep it on track, right?
Yeah,
million.
exactly. And critical piece of our infrastructure.
Right, and
Get
it
that
is
project.
like, it's my baby because I started in 19 on this project and I gotta get it funded.
Well, we're running a little late, but I would entertain a motion to adjourn. But we still have a quorum.
So move.
Second.
All those in favor?
I.
Or adjourn?
I've never heard.
That's our 4 outside.
Thank you so much, yeah.
By the way,
And I did get the Juniper funding.
I was trying to get, why that?
Yeah, 585,000 for Deschutes County out of a $5.2 million bill.